let's discuss 2025 because we are just knocking at the doors of that. Miss Amisha Vora, the chairperson and MD at PL Group, is joining us to do just that. Amisha, hi. First up, season's greeting. Hope 2025 is bigger, better and brighter for you and the group.
Thank you so much, and I wish you all the same. And also wish the same to all the viewers also, that 25 entails a little less volatile and offers more money-making ideas for us.
I think that's realistically possible because it's been fairly volatile the last few months. And when it comes to 2025, the big trigger, of course, is Mr. Donald Trump coming back, and that just means volatility.
But also that, we are starting 25 on a slightly sober note. And in 24, we cleared a big hump in terms of elections at the center, some of the large states election, which also led to a period when central government working, spending slowed down. So 25 to that extent will be a much better year, according to me, that we are starting on a sober note. We will see the rise in capital goods. We will see most likely the inflation softening because the inflation has also been very strong in last couple of months. So I think that 25 can be once again a double-digit Nifty growth kind of a year.
Right. Hi, Amisha. This is Ankita also joining in. Season's greetings to you. Amisha, but there are a lot of macro headwinds. The dollar index is strengthening. Of course, the Trump tariffs could kick in. There is also, lesser rate cuts as per Fed. And of course, there are a couple of macro headwinds that, that's stacked up against India. And our quarter two earnings were also not something to talk home about. What can really move the needle for the market now, besides, of course, a good surprise on the quarter three earnings?
No, I think the surprise in earnings is at least 1 or 2 quarters away. We will continue to see a little earnings downgrade only for FY25 in terms of Nifty, I feel. But at the same time, the Nifty is also corrected from the top. So correction from here on, in my view, cannot be more than 5-7% maximum. And even if it spends little time, it becomes a good opportunity to buy selectively. At the same time, as the order inflow and government spending has improved and it will continue to improve, then the earnings outlook for 26 will start improving.
I think that's what we need to watch out for, the progressive improvement in the earnings momentum from here on. But Amisha, talk to me about the key themes that you're watching out for in the coming year. I mean, this year, of course, there was that public sector theme that did well, manufacturing, energy transition, Gen AI. These were much talked about terms. In the next year, which are the top 2 or 3 themes that you're watching out for?
So what you mentioned is absolutely right, particularly public sector, where the wealth creation really unlocked. But otherwise than that, if you see, capital goods as a large pie has done very well, except a bit in last 6 months. I think that it will start delivering again in 25. As what we believe that tourism, healthcare, all the tertiary service sectors will continue to do very well. And new energy as a theme will continue to do well. These are not new sectors or themes, but I think some of the themes which will continue to deliver as there is earnings visibility and there is order visibility.
Right. Amisha, also, will this coming year be a year where the broader markets outperform, or will the large caps take the center stage given the FII selling that's coming in large caps?
No, I think it will be a stock specific year. So it will not be that major money will be made if you are in large cap or if you are in mid cap. But if you select the stock and sectors well, that you will make still a very decent money next year.
Point is taken, but Amisha, I'm going through the themes that you talked about for 2025. What's conspicuously missing is financials and financial ancillaries. I mean, I don't see banks, I don't see NBFCs, I don't see insurance or the capital marketplace. Why exactly is that? Have they run up enough or the fundamentals are not good enough?
No, what we have mentioned here is at the current valuation. We think that here you can start nibbling in. On a broader basis, I do believe that select banks with limited MFI exposure will continue to do well, and the valuations have come very attractive in terms of price to book and ROE. Within the BFSI, I also think that we've been continuously pushing asset managers. So capital market or asset manager themes selectively will also do well.
Right. Also, Misha, how do you like QCommerce as a space? I mean, that space is really hot right now. I mean, with Zomato entering the Sensex, it is a duopolistic market for now, but the competition is really heating up. How do you like that QCommerce player for now?
So precisely as what you mentioned, that Zomato did very well in terms of their shift in strategy post the listing, and it has also got investors liking the shift. As we stand today, after the kind of run up which has happened in market cap and the growth that has been coming, we see that the competition will hot up a lot in the current year. And one needs to really see how the incumbents are taking the challenge, how in terms both their growth as well as gross margins or earnings are getting impacted. So does it mean that at this current juncture we have clarity? I think that the valuations have run up and we would love to see how things are panning out.
Wait and watch is not a bad strategy right now because it's a developing story to say the least as far as quick commerce is concerned. But Amisha, 2024 was also marked by a inflow of IPOs. It was just the year when we kept talking about one or the big IPOs one week or the other. Do you think it's going to be similar in the coming year? And is there any specific kind of area that we are watching out for in terms of the IPOs?
So as you're very right, IPOs, not only broad IPO for growth capital, even offer for sale, QIPs, all kind of fundraising really gave very tough competition, you can say, to the secondary market. I think the trend will continue in the current year 25 also, as if the kind of inflow which is coming at 35,000 crore a month in SIP continues, asset managers will also look to continue to pour this capital into decent opportunities. So I think that, but QIPs and IPOs will continue. But the recent trend is that the over expectation in terms of valuation, which most of the promoters had, that has been coming down. That is getting a good grounding now, and investors are becoming choosy on valuation as now the opportunities are many in terms of this pre-IPO, IPO, and QIP opportunities.
Yeah, so domestic, flow you talked about, and yes, the way managers are kind of forced to make deployment as well. But what do you think will make the FIIs come back to India? Growth hasn't been that big a challenge. Yes, there was a blip in GDP for a quarter, but if you take it on a relative basis, India is one of the best performing markets in terms of growth. What then is the challenge? Is it the dollar index and the fact that the US market looks the most lucrative?
See, one, of course, US market has been doing good. And the expectation in terms of dollar index. But as you see, from a global perspective, still our challenge in terms of either valuation and growth, the combination, last year was very high. If we continue to consolidate for a while, that itself in the normal course will offer a course correction to FIIs to relook at India, because the growth will bottom out. At the same time, valuations will continue to come out very attractive. So I think that natural adjustment will bring FIIs back to India.
Right, Amisha, but do you not think the valuations are attractive at this juncture? I mean, the correction that we have seen in the last 3 months from the September highs, are we still not, do we still not have attractive valuations? Are we likely to correct more and then probably become a more attractive market for the FIIs to come back?
Yeah, because correction can be both time-wise or real correction. And till we see the bottoming out of earnings, which I think is probably a quarter away, is this the time in this quarter maybe that we will start seeing the gradual inflows coming in?
Okay, so one more quarter of earnings downgrade or earnings pain, and there the recovery will start. Thanks, Amisha, for making time and speaking with us. It's always a pleasure to speak with you, and wishing you the best of 2025 yet again.
Thank you so much.
Okay, that's how the market in 2025 is likely to look like. But
if you like this video, then like, share and subscribe to ET Now.